Good morning, guys. Welcome to this Friday, February 13th. It is Friday the 13th. Maybe we shouldn't be trading today. I don't know. If you're superstitious, maybe you should just go hide under the couch for a day. I don't know. So far, the overnight is just kind of staying weak. Not much lift from yesterday's little sell-off. And I don't even know what caused that sell-off. If it was anything more than just algos or risk-off kind of dynamics. But I didn't see any headline or anything causing that. But definitely a potential start of a move out of the middle to the downside. Right now, they're right down here at the lower edges. And this distribution, they start taking out this area, the 68. Well, I should say 6,800 to 6,850 is this big. It's a big area of congestion. That whole thing comes out and it starts trading below 6,800. But I think we are maybe finding ourselves in a move out of the middle to the downside. Not great, but it can certainly happen. And news this morning, CPI coming out. So we have a CPI read coming out this morning, and that's pretty much the only news we have. So 8:30 we get the CPI read. Depending on how that goes, could be a reaction. If it's a surprise to the upside, definitely a reaction to the downside is probably what happens. If it's surprisingly low, it gaps down, then we may have a nice little rally on our hands. So it could go either way. It says that wait, sees what number is, and we can trade either way. Doesn't matter for future trading. So we're looking at a market which I would start from the short side. We are right here at that big four-letter ledge at 6820s, five-letter ledge. So this is an area of with a pretty good edge, pretty good pretty good support right there. And so far we bounced off it in the overnight, haven't really taken that out. But we've been down there testing it. And if the day session starts taking that out, we have one level below it, these two levels, 6820, 6800. Both of them comes out, yeah, look out below. I think it may get ugly. So that's the starting point for today. Starting off today from the short side of the market. Now, if the reaction is, I don't think this reaction is going to be massive in the directional. I just don't see them. If anything, I think the CPI is going to be to the downside. As it would be a surprise would be a higher read than expected. But I think the general policies is all about lowering cost of energy, lowering the cost of the components, which makes up the CPI. So it's going to be most likely pretty much a flat number, or maybe even a little bit lower, is what I would expect. But it's the surprise can always come. So the surprise to the upside, I think, sets this market off to the downside. But it's if it holds and the number is not bad enough for it to happen, then we have a shot at just been sticking in this range and see if then the question becomes, is the support going to hold, or are they going to try to take it out anyway? So looking to buy against these support areas, 6820, 6800 with a lot of caution. It is pretty good support. So I would be looking to buy against them, just not super aggressively. Looking for short setups initially though. Looking for shorts against the 6840s, 55s, up to the 70s, up to that mode 6850 and that 6895, 6900. So I would look for short setup all the way up here. If this starts trading above the 68, 65s, the session highs, I would probably take off the short buys, go back more range bound. Still looking for these two shorts. And if to start retracing the single print e-prints from yesterday, yeah, then I think we have a much better scenario in front of us. But who knows? I mean, we had one day the other day when they sold off, and then they had a hard retracement the next day. Today, maybe just the opposite. So maybe we may just get continuation to the downside. So well, we will see what we get. Just be mindful, big support area right here at 6820s. If that comes out, the next level down is probably going to be the attractor here at 6760s. That's probably the next attractor area we're going to. So that's, I think, is where we are heading next. And now looking at the bigger picture, the only thing I can see out there, which is it could potentially throw a wrench in this, is if that Iranian situation goes to shit. You know, if that becomes an attack, most likely that would probably happen on a on a Friday night or something like that. The markets are not closed. The market are closed. But it's you never know. That's probably going to cause a knee-jerk reaction in the markets to the downside. Usually, what happens, but right now, that's the only geopolitical outlier. I think it's kind of getting expected, but as soon as it actually happens, probably going to get a knee-jerk reaction on it. So that's how we get started. Looking to buy against these to support the I-6820, 6800 with a bit of caution. We're looking for early weakness. See if they can take this lower. So if we get early strength, we're looking for short opportunities against that 40, 55, 65 for rotations down. And above that 65, still looking for short against the 80s and the 95 to 6900s. That's a little bit less aggressively in this area. We're going to be more range bound. And if they start retracing the single print E's, yeah, we are back in action. So that's the way I'm looking at it. And let's see how this develops. On the Nasdaq, that's a guy which has been massively creamed. Man, these guys are getting, and this is ugly. And they are to the downside too. They're kind of weak on the lower end of the range, and they have this big area of. And as you can see, we have been through this one for a bit. Big low volume area right here at the 24,000. So 24,000 up to 24,300, 400. Big area of low volume. And they've been down here a couple of times already. It looks like we're heading back down to test this area again. So we'll see how the CPI comes out. But we are entering that area of congestion right now. So you can see how the volume here and the long-term distribution just keeps tapering off. And we have a lot less volume in this area. So I would not be surprised at all if we see a big run down here to retest that, try to run it below 24,000. I would not surprise me at all. That would be typical Nasdaq behavior. So initially, same story there, looking to buy weakness, but on the Nasdaq, you don't have as obvious of an edge. You have it's right there, the 600s. The next edge stand is the 400s, around about this 400 area. So all the way down here is where you find pretty decent support. So you're kind of wimpy in between here. So yeah, there could be support anywhere on the way down, but you have a lot of range here to deal with. So not as obvious of a buying opportunity in front of us. If you get early strength, I would look for short setups against the 24,700s, 800s, 860s up to that 950s. Above that session highs at the 850, 860s. What is it? 870s. So above that 24, 870s. Above that, I'll take off the the short bias, go back more range bound. So still looking for short against the 870s and the 940s. And if you start retracing the single prints, same story there. So they starting to think about the potential retracement trade on the upside, looking at the long side at that point. But I mean, right now you can see the weakness is just there. They're taking it lower right now as we speak. So it's leaning short. It's leaning lower. But I would look for if we get early strength, because we may get a little bounce off right at the get-go as the day session opens. Even if the CPI whips us around, if the day session starts with a little rally like this, run up here, I would look to sell against those. If they really start taking out some key resistance areas, yeah, then I would be more inclined to start leaning on the long side. But right now, we have pointed lower on both the ES and Nasdaq, at least to get started. And let's see how that goes. All right, so on the Nasdaq, initially here, we're looking at getting short against the 700 to 720s, the 800s, the 870s, up to the 24 950s for rotations down, and above that 870 we take off the short bias and go back range bound, and then watch if they can potentially retrace those single prints. That would be pretty spectacular. But right now the morning looks pretty gnarly, so we are heading lower. Finally, the bonds. Bond market traded up a bit yesterday. They've been holding. You see the auction, ran it higher in a pretty good clip. They popped it pretty good, and they're holding up here at the 117.09, 117.10s. Overnight took a little bit higher, but now we're holding the range on the overnight. So in the bigger picture, we are up again. Finally, taking at least is drifting up from this area. So we have a move out of the middle. And not, I wouldn't call this a move out of the middle. I'd say we're just drifting higher and moving ourselves up to this upper edge. Now look at this big edge at the 1710s. That comes out, we can start trading higher here. That could take us a bit higher. Now, this is 180 days. So you can see how this low volume areas, they're getting less and less important as the days roll on, and we are heading up here towards upper area. So right now, the bond market, I would say, as you start trading higher, you're just looking for resistance as you start moving this higher. I think a key area is that 1710 to 1716. I would probably give it a 5-6 tick range. If that comes out and they start trading above that, I would think that we may have a shot at see the bond market trade higher and the yields actually come down in a substantial way. So starting off, leaning towards the long side, looking to buy weakness initially against that level, the 1704s, the 117s, the 1624s. So below 1624, I think that they're retracing back here to that, and they're retracing a little bit further than they should. But against these two first areas, the 1704s and the 117s, you have a pretty good ledge here at 1630. So between 1630 and 117, looking for a buying opportunity. Rotations back up again. And then we'll see if that's going to hold up or not. So that's the bonds to get started. And if they can't take it out, I would look for shorts against that 1712. It is a pretty good area of resistance. So it's actually 10 to 12. I would look for a potential short setup or rotations back down again. And if they take out that 12, so I would just stay on the long side. But again, bond market is a lot slower. It moves pretty good when it moves, but then it then it just sits there. All right, so back to the ES and NASDAQ, and we got about 12 minutes before we get news, CPI, and then let's see how this market reacts. All righty, guys, we'll see you back at 11:30 for the next update. So good trading. I'll see you back then.